What are we to expect from today's CPI data release? The CPI is known as the Consumer Price Index, and it is a key economic indicator to the US dollar as we have it scheduled for today. It's a pleasure having you guys here. And of course, we are going to be talking about the market based on the USD, as what we focus on most of the time happens to be the major currency pairs, gold, and at times we also look at the Bitcoin. But then based on the USD, we need to ask ourselves what is happening to the USD. This is the chart of the USD right in front of us, but we are going to cross over to the calendar. We need to find out when is this CPI news coming out. One thing I always say is that the impact here, as you can see, we have turned everything to red, meaning that we have only highlighted the red impact news. And the red impact news happens to be the high volatility news, those that when they occur, the market tends to react in a very volatile manner. And that's why you need to be careful whenever you have the red impact news that is scheduled for the day. So Tuesday, February 13th, just a day before Valentine's Day for those that celebrate it. Tuesday, February 13th, this is the West African time, by the way. You can always click here where you have the time at the top right corner and then adjust it to your own time zone. But then we have the CPI, as you can see over here, and that is for today. And then the first one is 8:30 a.m., which is about 4.5 hours from now for the Switzerland francs. So do not be surprised if you see the USD Switzerland francs or the pounds, Switzerland francs, or any instrument that has any pair that has Switzerland francs, the CHF inside, because we should have some very high volatility either to the upside or to the downside. And as usual, if you do not have any directional bias, the best thing to do is to be on the sidelines. But we're not even after the one for 8:30 a.m. West African time, but we're after the one by 2:30 p.m. for the US dollar, because this US dollar is going to affect every other major pair, every other major currency, right, in the pair. So this news here, CPI, trust me, if you don't know what's happening, I would always advise that your money in your own pocket is better than your money in somebody else's pocket. That simply means that it is best for you to sit on the sideline, sit on your hands, if you do not have any clue whatsoever what is going to happen in the market. I can see under the actual, we don't have any actual yet for today because the news hasn't been released yet. But then based on this news, we're now going to cross over to the USD. That is on the technical analysis point of view, because we always say try to combine the fundamental and the technical analysis together. It will do you good at the end of the day. So this is the USD index from the hourly time frame. I'm also going to show you this from the 4 hours time frame, so you have, different views of what might happen based on this dollar, the DXY. So from this hourly time frame, first of all, price failed to get back to this area here of former resistance, which was then supposed to act as support, but it never really got there. It never really got there, got close, got close, got close, and then price seems to be pushing higher. Now, based on what price is doing here, if price is going to get to this level here, the highs over here of 104.25, it has some hurdles to face. It has here to face and also here to face. So we could call this our area of interest for sellers, and then here our area of interest number 2 for sellers as well, right? So we must understand what the market is doing from different angles, and then use your price action to jump in, right? Nonetheless, this chart is an uptrend from what we can see. But based on these levels that we have here, they could easily act as resistance. You could even call them areas of what? Areas of supply. Supply and resistance, they are similar, but yet they are different at the end of the day. In another video, I'll try to explain the difference and the similarities between the two, right? So from this area here, price might act accordingly to this area of supply, and you might see it drop further down and eventually get to this point here. or it might even get to this point here before it drops down, right? Who knows? But then it might also get to these highs here of 104.25. So one thing I always advise, wait for the market to get here and see the reaction. If it gives you your trigger to sell, that is if you are a seller, because you must always understand the type of trader that you are. Are you a trader that goes with the trend, or are you a trader that goes against the trend, right? Once you understand this, then you will now know what you're going to be doing, because price could also get here for you to sell, or even get here for you to sell as well. But then this is the hourly time frame. I want to show you this DXY from the 4 hours time frame, and in a nutshell, this is what we have. We have the price now, which happens to be in a wedge. As it's in a wedge, what we're expecting now is that at this level, price could either bounce and then drop back to this other area here in the wedge for the lower trend lines, or price could break out from the higher trend lines and then use it as a launching pad to push higher. So as I always say, make sure you wait for price to act and then we react. And that's why you would all be hearing about price action, price action, price action. Price action simply is the behavior, the direction, the trend of price. You must wait for price to make the first move, and then you will do what? You will follow that move. So if it's looking like it wants to bounce, look for selling over here. Remember in the hourly time frame that we showed you, we looked at this area here as a possible area for short. So let's see how that goes. So there's a bit of confluence over here. And in that same area here, once it breaks that area, could also come back and then have this as a launching pad to push higher at the end of the day. Now, this is the DXY from the hourly and also from the 4 hours time frame. From the Euro USD 4 hours time frame as well, if you look very well, we have this area here, this areas here of support. They breached out from here, but then we had the act as support, and price could as well come back to this area. The thing I like about this particular chart now, two things, right? Following the waves, because this is one major wave, this is another major wave, and then this is another major wave here. Now, based on this major wave, one might decide to look at it based on only this recent wave, meaning that you're not looking at the entire thing. Whenever you look at your chart, you can really look at the chart, the entire chart, or a portion of the chart. You're looking at a portion of the chart and you must understand how to interpret that portion so that it doesn't confuse you at the end of the day. So here could easily be an area of support where the buyers could easily jump in and then push the market higher to this point. This is also with respect to the dollar being bearish. Because once the dollar is bearish, then you should expect the Euro USD to be what? To be bullish and then push higher. So if this is bullish for the Euro USD, for the Euro USD, so this simply means that the dollar would be what? Would be bearish. And of course, gold, because if the dollar is going to be bearish, you should be expecting the gold, the shiny metal, to also be what? To be bullish. They work in opposite directions, just like the dollar and the Euro USD as well. Look at what we have here. We have a key area of support. There was a little bridge, but still acting as support, and then it's more or less still in that same area. So we could easily say that it is very possible for the gold to push higher back to this area of 2068 area, or it might as well break out to the downside, use that area to drop further down, right? At the end of the day, it's either it's going up or it's going down. Either one is going to do. Make sure you can see it using your strategy, because you must always use your trading strategy. Support, resistance, price action, SMC, ICT, whatever your strategy is, make sure you use it and then have your stop loss in place, because you must protect your account accordingly. And then also, another thing we need to also understand is that price could either break or bounce from a level. So you need to identify your levels and then wait for the reaction at that level. Is that reaction at that level that will help you to know whether it's going to bounce like this or whether it's going to break that level like what we have over here or break over here. So we always make sure that you have that little general understanding of what price can do at any level. And trust me, once you have that understanding, you are good to go. Now, we're going to be rounding up this video right now. And what I want to say is ensure to always protect your account accordingly. Number one, very important. Make sure that when you are placing your lot size, you are using your volume, make sure it is well calculated. And if you do not know how to calculate your lot size volume, on the website, our school's website, training.cscforest.com/school, you can always scroll down to where you have number 7, position size calculator. Click on it, and then it launches this page over here where you can put in your account balance. Assume your account balance is, let's say, $2,000, and then you want to risk maybe 1% or whatever. This is up to you at the end of the day. Maybe your stop loss from your analysis, you can see as you clicked on that, that's already giving us the amount that we're risking based on 1%. And then your stop loss based on your analysis is maybe 50 pips. And then your instrument is maybe, let's even say gold. Let's look at the gold we're talking about now. Your instrument is gold XAU USD. Click on it here and then click on calculate. And then it says the position size is 0.04 lot for XAU USD, which happens to be gold, right? Very key, very, very important that we understand this. And you have a table also to know where 0.04 falls under. 0.04, that is it here. It falls under micro lot size, so that will be 4 micro lot sizes. So this calculator here, position size calculator, is going to help you to ensure that your risk management is always very key, very sound. This is one of the reasons why a lot of traders are losing big chunks of their funds or even crashing their accounts. Now, with that said, I want to say thank you. If you have any question, comment below in the section. And of course, if this video was helpful, give it a thumbs up. If you're new to the channel, hit the subscribe button. It's going to help us to grow. It's going to help others to also see the video and then learn a thing or two. If you have any questions or you learned anything, you have any feedback, let us know and we'll get back to you shortly. Trade safely, guys. CPI, Consumer Price Index, is real. It's around the corner and it is bound to be explosive. Okay, guys, enjoy the rest of your day and goodbye for now. Cheers.